Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and today's contract tip has to do with a question that I have received several times lately, and curious as to why, but decided to go ahead and do a video on it. So the question is, in the contract, where are the various contractual rights for a seller to terminate a contract? So, generally speaking, in both the GAR purchase and sale agreement and the RE forms purchase and sale agreement, there are very few contractual rights for a seller to terminate without being in default once they go under contract and go binding with the buyer. But there are a few contractual concessions, or rights to terminate. Now, generally speaking, in both GAR and RE, but especially in the GAR contract, whenever there is a contractual termination right, you will find that there are three elements, whether this is for a buyer or a seller. There are three elements for termination. There is notice of default. So the party that did not default must give the party that did default notice that they have defaulted. Then there is a time frame to cure that default. So the party that defaulted, they have a certain amount of time to cure that default. Then if the defaulting party does not cure the default, then the other party has a certain time frame within which to terminate. And if they don't terminate, then the contract continues on with that, whatever the default was. So notice of default, time frame to cure, and then time frame to terminate without penalty. And if there's no termination, then the contract goes on. So just in general, that is the prescription for termination rights for both a buyer or a seller based on a default. So in the GAR purchase and sale agreement, the first section where it talks about a seller's right to terminate a contract based on a buyer default is in paragraph B5, where it talks about the earnest money. So in paragraph B5 of the purchase and sale agreement, it talks about if the buyer defaults on the earnest money. And for a buyer to default on the earnest money, either they fail to remit it, or they remit it, the holder makes the deposit, and the funds are no good. In either situation, the holder is not in possession of the funds that the buyer said they were going to remit for earnest money. So if the buyer defaults on the earnest money, then the holder of the earnest money must send notice to both the buyer and the seller that the buyer has defaulted by not remitting the earnest money per the contract. Then the buyer has a time frame to cure. And in the GAR contract package, that time frame is 3 banking days. And I'll talk about the RE in a minute. Then if the buyer does not cure, then the seller does have the right to terminate the contract. But the seller only has 7 days thereafter, after the cure time frame, to terminate. If the seller does not terminate, then the contract goes on. The seller's right to terminate is waived after that point. So then the contract just goes to close without earnest money in the deal. The next section in the GAR contract where the seller has the right to terminate is in paragraph C3, where it does talk about damage to the property. So this is if there is substantial damage to the property, either by something like a fire, a hurricane, some sort of weather-related event, or some sort of major vandalism or something like that. If the property is substantially destroyed prior to closing, then the seller must first give notice to the buyer that the property has been destroyed. And then and also the insurance issues that would go along with that destruction. And then either the buyer or the seller may terminate within penalty, but not later than 14 days from the notice that the property has been destroyed. And then again, there are time frames and prescriptions for if the parties choose to terminate, what happens, and if they don't choose to terminate, time frames within which they have to close if they do stay in contract. Now, the other issue in the GAR contract where a seller does have termination rights has to do with the buyer's loan. So let me show you where that is in the GAR loan contingency exhibits. In the GAR contract package, this is in all the loan contingency exhibits, the conventional loan exhibit, FHA, VA, and USDA. And basically what it says is contained in paragraphs 7 and 8. And basically what that says is after the buyer's financing contingency time frame has passed. So the buyer and the seller agreed that the buyer has so many days from the binding agreement date to terminate the contract without penalty if they can't convince a lender to lend them money. So they did. The buyer does not terminate within that time frame. So we are after that time frame. So after that time frame, the seller now has the right to go to the buyer and request evidence of the buyer's ability to close. In other words, buyer didn't terminate under financing, so the seller can now say, okay, great. Now I need proof that you are going to be able to have the financing to close this loan. And basically what the contract requires is that the buyer provide a loan commitment letter with those conditions. Now, we all know a loan commitment letter from any lender is not a guarantee of closing. Nevertheless, the contract allows for the seller to request this from the buyer. And again, there's all kinds of time frames written out from the time, again, notice, time frame, then right to cure, then a right to terminate with the time frame limiting to that. So all those time frames are spelled out in the actual exhibits, and we go over this pretty in depth in our GAR contract classes. But anyway, just wanted to let you know in paragraph 7 and 8 of the financing contingency exhibits, after the financing contingency, the buyer's financing contingency time frame has ended, buyer does not terminate, seller now has the right to request evidence of the buyer's ability to close. Buyer has so many days from the notice that the seller sends requesting that evidence to provide that loan commitment letter with conditions. If the buyer does not provide that loan commitment letter, seller sends another notice saying, okay, buyer, you're in default because I requested that loan commitment letter, that evidence of your ability to close, you didn't provide it. Buyer has time frame to cure. If buyer does not cure, then the seller has the right to terminate the contract. And again, there are certain time frames that it is all spelled out that the seller must terminate. If not, then they go through with the contract. One more thing to bring to your attention, and this is spelled out in those termination rights specifically, that any termination must be in writing and signed by the parties. But generally speaking, any termination, it is specifically provided for in the GAR contract, in the purchase and sale agreement, F201, under paragraph C4E, where it talks about entire agreement modification and assignment. And actually, this verbiage, again, has been spelled out in all the specific termination rights. But for 2020, GAR actually added this sentence under this section, other provisions, entire agreement. And it does specifically say that any agreement to terminate this agreement, meaning the purchase and sale agreement, or any other subsequent agreement of the parties relating to the property, must be in writing and signed by the parties. So as agents, y'all need to take a look at your time frames. That's really, really important. And any notices and terminations must be done in writing and signed by the parties. And that's spelled out in that paragraph, as well as in the notices paragraph of the GAR purchase and sale agreement. Now, let's move along to the RE forms, and let me point out where those seller termination rights are spelled out in the RE forms. So in the RE forms, all of this is spelled out and explained in the standard terms for the purchase and sale of Georgia real property, which is RE Form 1 that goes along with RE 100, which is the actual contract. And in the RE forms, it's just a little bit different. Under the standard terms, in paragraph 3.3, it does again talk about if the buyer fails to remit the earnest money. So if they fail to remit it in a timely manner, or they send the earnest money to the holder, but the bank does not honor the funds, then for all intents and purposes, the holder is not in possession of the earnest money, so the buyer has defaulted on that provision of the contract. And very similar to the GAR contract, if the holder does not have the earnest money, the holder sends notice to both parties that the buyer is in default. The buyer has a time frame to cure, and in the RE forms contract, it is 3 calendar days from the date of the notice. In the GAR forms, it was 3 banking days or business days from the date of the notice. And then if the buyer does not cure the default, in other words, does not make good on the earnest money, then the seller does have the right to terminate the contract. And again, that is limited by 7 days. If the seller does not terminate within their time frame to do so, then the contract goes on to close. There is just no earnest money in the transaction. Now, the other section, there's 2 more sections in the RE forms contract where it talks about a seller right to terminate. And the next one is again in the RE forms, RE1 standard terms. It is in paragraph 6.3.2. And this is vastly different from the GAR forms. Basically, what this says is, just so you know, in the RE forms, if the parties are binding under the RE forms contracts, there is no unilateral right to extend the contract for a loan issue or a title issue. That right is gone. Any extension must be done by an amendment. However, we know there are TRID laws in place, TRID federal regulations, that it is illegal, in essence, for a lender to close a transaction for a buyer if they have not sent out these required disclosures to the buyer prior to closing. So what this says in the standard terms under paragraph 6.3.2, 2 things that give seller termination rights. Number 1, if the buyer is not able to close because of a lender issue, then the buyer is required to send notice to the seller that, hey, I can't close on our closing date. This is when I'm going to have to close because of a lender issue. At that point, a seller may terminate the contract. The seller does not have to stay in contract with a buyer who is not able to close on the contracted closing date. Now, they can always agree to an amendment, but again, and there's way more information in that paragraph, but that is a seller contractual termination right in the RE forms contract. Additionally, and this is also spelled out in that paragraph 6.3.2, if based on a buyer's loan, the seller is going to incur additional costs that were not already provided for in the contract based on loan issues. For example, whatever the underwriting criteria is of a buyer's loan, if those fees that a seller is required to pay go up, the seller also has the right to terminate the contract. Now, one more paragraph in the RE forms, and again, this is outlined in the standard terms, which is RE1, and this is under paragraph 10, where it does talk about default. So the default paragraphs in the verbiage in the default paragraphs between the GAR contract package and the RE forms contract package is a little different. But basically what it says in the RE forms is it says that if the buyer defaults under any terms of the contract, the seller may terminate the contract, and then the earnest money is the liquid damages. So They have gotten rid of the right to sue sue the buyer. There used to be rights to sue the defaulting party by any remedy under the law. They have taken that out in 2019, actually, but it is a seller termination right if the party defaults. And again, there is requirements of notice that must be given. So, what do y'all think? Not very many seller termination rights within the contract. So, there's a lot of buyer termination rights outlined in the contract, but not many seller ones. So, if a seller does terminate outside of something that is provided for in the contract, in essence, that seller would be in default, and then the parties would go back to the default paragraphs that they had agreed to when they went binding to see what the remedies and how to handle those issues. So, hope those contract tips helped you out. Thank you so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.